What is happening, traders? Welcome back. In this video, I'm going to update you guys on the current situation that we are seeing on US30. So if you recall, I previously made an update when the market was testing the psychological level of 33,000, explaining all the reasons why I expected the market to make the retracement move back up to this harmonic M formation neckline. And as you can see, that's exactly what has happened. So it's time to make an update for potential new opportunities for the coming week. So if we go to the monthly time frame, what we can identify from a monthly perspective, something we've spoken about many times. For me, we have a very important shift in structure from a bullish monthly time frame to a bearish monthly time frame because we have broken below the higher low formation. The market has made a bearish impulsive move, breaking below the previous higher low, forming a new low, and now provided us with a retracement, and I am still expecting to see the continuation to the downside and a new lower low to form from a monthly perspective. If we now drop down to the weekly time frame, what we can identify from a weekly perspective is we had this accumulation. Now the market started to accumulate, consolidate inside of this wedge, this range. Then we saw a manipulation to the upside into psychological level of 35k, also into this weekly and monthly supply zone that we have all across this level. And since hitting the supply zone, the market has pushed to the downside and given us a weekly market structure shift. So now we've got the weekly time frame aligning with the monthly time frame. Why? Because exactly here you can see we've shifted structure. Previously, the market was bullish from a weekly perspective, forming higher highs and higher lows. This was the last higher low that pushed the market to the upside to sweep the high. Now, as you can see, the market has broken that low, forming a new lower low, giving us a change of structure from a weekly perspective. So like I just previously said, now the weekly time frame is aligning with the monthly. If we now drop down to the daily, as I said at the beginning of the video, we previously updated you guys when the market was here, explaining why we expected the market to come back up to retest the M formation neckline before potentially moving lower. And that's exactly what's happened. The market removed this external liquidity here, and now it's targeting the internal liquidity. Now, first and foremost, what we need to identify is potential areas in which the market can reverse and continue that overall bearish trend. Now, here we have a level of imbalance. We have a level of imbalance exactly here from a 4-hourly and daily perspective. We have from this wick low to this wick high, beautiful FVG. And this is a target for us before we can look for shorts. Now, if we drop down to the 4-hour time frame, what we can identify from a 4-hour perspective is how the market has trapped traders. So what do I mean by that? Okay, so here the market pushed to the upside and it swept the highs. Since sweeping the highs, the market made a break of structure from a 4-hour perspective. Now, this created a huge amount of liquidity all inside of this area here from traders that were trying to short that market structure shift. Now, this was an inducement. The market has created this price action to induce traders to go short. Now, where is their liquidity going to be? Their liquidity is going to be above the high of the previous week, which is exactly this high right here. Now, as we speak, the market is being attracted into that zone. Okay, so the market has manipulated traders into opening their position too early. Then the market is taking out their stop losses. It's getting attracted into that FVG, and that is where we want to be looking for potential short trades. So how we can be potentially looking for those trades, if we go back to the 4-hour time frame, we can just clean our charts a little bit. Okay, we can identify that the high of the previous week, that is wrong, the previous week high has just been taken out. Okay, we can also identify that the stops above this 4-hour range are starting to be targeted. And what we're looking for is a short, all inside of this area of imbalance. Okay, and we will be looking for a potential accumulation, manipulation, and distribution here. So basically, all inside of this identified area, we will be monitoring for potential short entries. Whether this comes today, tomorrow, or Wednesday, that's yet to be seen. All we know is we have an area of interest to us. We also could layer on confluences here by taking our Fibonacci from the high to the low of the bearish impulsive move. And look at that for confluence. We have the golden ratio, the 0.618, aligning perfectly with the zone that I've already mentioned. So we'll be waiting for price action to spike into this level before monitoring for any potential short entry confirmations.